Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by James Henderson, manager of the Lola Investment Trust. Hi, James.
Hello.
So it's been a tricky start for the year, for markets, for all professional investors, and indeed for your trust. However, seeing a drop in value in the trust is no unusual thing for you, and it's normally followed or indeed, the precursor is great gains. And if you look at the sort of the 5-year annualized view of the trust, it's returned 10% steadily for investors. But if you look at the price, it's much more like this. And I was just wondering why that was, what the nature of your investing makes it so volatile.
Well, it is contrarian investing. So when things are weak, that's when I get excited, and when things are strong, that's when we usually am selling. And I'm often buying too early. A value contrarian person is buying too early. So I had been buying things like Rolls-Royce during the autumn. I've been buying the miners, for instance, for the last few months, and a lot of those prices look wrong. Just recently, the most recent prices look much better because there is a bit of recovery going on. But a contrarian, it is lonely sometimes, and you have got to have a fairly thick skin to take a bit of pain. But markets always usually overreact. They usually make things out to be worse than they are. They usually make them out to be better than they are when things are good. But at the moment, I think the problems are being over-exaggerated. I believe the global economy is growing. I think that when that growth is seen, we'll think that some of the prices that industrials and the mining stocks have been sold down to are bargain basement levels, and that's why I'm adding it at the moment. But it has, as you're right, it's painful. But that's always been the approach, to buy into these downturns.
I mean, some people would call you brave, some people would call you crazy to be adding miners at this time when sort of the outlook for oil is uncertain and when the feeling around oil stocks is so negative. But I suppose that, as you say, is indicative of contrarian. What was the sort of trigger for you to make you think actually now is the time?
Well, when they're trading substantially below their book value, very, very easy metric that you start to look. And what people say is, James, wait for a catalyst, they say. Wait for that catalyst. But of course, you'll only know what the catalyst is after the event. So you have to be buying on the way down. We might have had the catalyst. It may be that what happens in these companies, when things are really difficult, they look at themselves, they look at their costs, they think, what are we really good at? And let's get out of what we're bad at. These are moments in companies' life. And that's what I think. I was at the Anglo meeting yesterday. That's sort of what they were facing up to. They were getting out of quite a lot of business, and they were saying, what are we good at? Well, we're De Beers, diamonds, we're good at that. We're good at platinum, we're good. So we're going to do that, and we'll get rid of the iron ore. And it's those kind of big moments that are often, when you look back, the catalyst. But at the time, can you get out of the iron ore? And all these things are uppermost. So to me, it's only, you've got to be buying into the pain. You've got to do it slowly, but keep going. And on the really red days, when you were out of the office, you need to be in the office buying a few. And then when it does bounce, just be careful. Don't get sucked in on the good days. Buy it, because another bad day will come along. Buy a bit more on the bad days. So that's how a contrarian value guy operates.
Of course, Anglo is a very large stock, is a stock in the FTSE 100, but you have a remit to go across all market cap, indeed right the way down to AIM, and AIM has been quite a profitable investment for you in the past, hasn't it? So where are you positioned at the moment in terms of market cap?
Well, I've run Lowland 25 years, and I'm always more or less around the same. I'm a third large, third medium, and a third small. In the small bit includes the AIM investments. I think AIM is a great place for stock picking because it's fairly ignored by many analysts. That gives the opportunity to find value. At the moment, it's slightly a sideline for the market. Everyone's thinking what's happening in these big stocks, and that's an opportunity because if people aren't paying attention, you've got more chance to be able to add a little bit of value if you pay a bit of attention to it. Nothing clever, just pay attention. I don't know when, for instance, when the oil price will recover. I haven't a clue, so I don't worry about that. I try and spend my time thinking about a few things where I might be able to see what's happening, and AIM would be one of them.
You mentioned oil there that you were adding, and you also mentioned that you'd added Rolls-Royce recently. Where else are you sort of seeing the best opportunities?
Well, across industrials, I've been adding. I think what's happened has been that the big oil companies have cut back their capital spend, the mining companies have cut back their capital spend, and that's hurt quite a lot of the industrial companies in related areas. But actually, elsewhere in industrials, the world is growing quite well. We're seeing more spend on construction, more spend on road build programs, for instance. Automotive is going well. The amount of air miles flown is growing at 6 or 7%. You know, these are all, so there's a lot to do out there, but everyone's so fixated about the problems, they're not noticing that there's quite a lot of growth going on. So I think for a lot of these industrials, they're going to be surprised at a medium-term outlook. And also, remember, there's a replacement cycle. So yes, oil companies can stop their capital spend today, but those pumps they use, they will wear out, and they'll be back buying pumps in a few months' time, I believe.
James, thank you very much.
Thank you, Emma.
This is Emma Wall for Morningstar. Thank you for watching.